Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest updates from the stock markets, help you understand how the benchmarks, the broader indices, the sectors and the stocks are buzzing in trade right now. What is it that is really moving the markets at this point in time, and how should you be really approaching some of those stocks that are reacting post their Q3 numbers? All of that will be discussed in this power-packed episode. But first up, a quick check on how the markets are doing at this point in time. We'd opened higher in trade, buoyed by the sentiments domestically. We did see some good earnings coming about, helping the markets to inch up higher right at the opening levels. But as we move towards the second hour of trading session, we are seeing subdued action, especially when you talk about the benchmarks. 127 points down for the Sensex, 60,131. The Nifty trading below that 17,900 mark and down about 60 odd points. Flat to a negative bias is what you can really spot right here. Also, when you see the other broader indices, the mid and the small caps, both are actually kind of listless today. 0.04% of a loss for the small caps, and the mid caps down by 0.1%. Talk about the India VIX, that's shot up almost 5% in trade, 15.1, the level at which it is trading at currently. The market breadth clearly in favor of the bears at this point. 37 stocks on the declining trend, with advancing stocks pointing at 13 as far as the Nifty 50 stocks are concerned. Also look at some of the sectors that are buzzing in trade. Well, apart from the IT stocks and the PSU banks that are shining bright despite this muted, subdued trade that you're seeing on Monday morning and Monday afternoon, rest all of the sectors are down in the red. If you spot some of the other sectors like metals, they are down by 1.5%, so seeing some cuts over there. Slight losses coming in from the auto pack again, which had been subdued all through the auto expo as well. So 0.7% of a decline for that one. 0.5% up for the financial services. Realty is down in trade. Private banks, financial services, both not participating today. FMCG stocks sulking too, about flat to a negative bias, right? That for that one too. Pharma stocks down by 0.5% as well. So it's just these two pillars, on which the market weight is hanging, IT and the PSU banks that are shining bright despite this kind of a move on the downside. Let's look at the top losers. What are the kind of stocks that are dragging today? The sentiments: Adani Enterprises down by 2.5%, NTPC, Axis Bank, Eicher Motors and JSW Steel. These stocks are dragging. On the other hand, you do have the IT majors, Tech Mahindra, HCL Technologies, Wipro, Infosys, all of them upwards of 1 to 2.5% odd. So amidst these earnings that are buoying the sentiments for the IT space. Apart from this, it's the cement major, Ultratech Cement, that's also doing well at this point in time. Let's welcome our guest for the day. Kranthi Bathini joins in from WealthMills Securities. Kranthi, good afternoon and thank you so much for taking the time out for this discussion. Well, another week has started, albeit some cautiousness that we can spot on the street and amid a whole lot of earnings. But first up, your comment on the market movement, the texture that you look like at this point in time, and what can we expect for this entire week?
Sakshi, if we analyze, drill down the data and observe the tendency of the market at this moment, markets are in a complete range bound. It's trying to uh, go ahead of 18,000 levels, but it could not able to sustain above 18,000 levels. And also some kind of hot money that's supposed to come to India because of the China opening its economy and the borders. So some kind of money has been flowing into the China also, which supposed to be coming into the Indian markets. So this is the dichotomy that's going ahead right now in the market. And also at present, global indices also, they are in the consolidation zone. So altogether, markets are in a consolidation phase right now. But whenever the market comes down, 18,000 levels, and it's if the stocks are available at a attractive valuations, if the stocks are available at a 5 to 10% discount, investors can and the traders can pick up and they can do a delivery based trading in the medium to short term. But if I have to look the entire week as a scenario, 18,350 is the level on the upside for the Nifty. One need to watch over that to get a clear-cut, sustainable signal for the market, and we need to see the level of 17,800 in the bottom. So currently,
Okay.
market is in a complete range bound, and it's stuck up in this range right now at this moment.
Okay, all right. Let's also focus on two major companies that actually reported their earnings, and what should investors be really doing post those earnings as well. Let's talk about first the investors' darling stock, and that's D-Mart. After the Q3 results, there's been a sharp downward reaction today. About if you see, look at D-Mart Q3 earnings, we saw the profit after tax really rising by 7% year on year to 590 crore rupees. However, it has missed the estimates quite sharply this time around. Avenue Supermarts, in fact, is right now trading about 5% lower, and it is trading at around 36.79. That's the kind of level at which it is trading at right now. So what were the concerns? So consolidated revenue about 25.5% jump we actually saw. That was in line with the company's own estimates as well. But when we talk about the kind of higher expenses that the company has reported, that has led to some contraction on the profitability front, and that dented the bottom line to somewhat as well. Also, the contraction in margins was steeper than 40 to 60 basis points estimated by the analysts earlier. The total expenditure has increased by 27%, the staff cost rising by 19%. These are some of the concerns that have been brought about, and therefore you can actually see a sharp downward reaction. On D-Mart, I wanted to understand from you, Mr. Bathini, that this stock has been a consistent compounder for investors. It has created a whole lot of wealth from the time it got listed. This stock has been definitely preferred by analyst community and investors always. But looking at the current quarterly earnings, are there any red flags for the future growth, or is this a one-off that investors can look to ignore at this point in time? Your thoughts?
Sakshi, as you mentioned, is the darling for the retail. But I need to mention that darling is not cheap. Okay, the valuations are very expensive. Uh,
Yeah.
and coming to DMart, it's a proxy for the India's consumption story, and uh, and uh, and coupled with a superb management who understand the complete nature of this India's consumption story, and that's where they have been moving their chips. They are moving their steps uh, to become one of the strong uh, retail story in India. But given the kind of some kind of subdued uh, results what DMart witnessed in the current quarter, it have some kind of negative impact on the stock. But for the long-term investors are concerned, nothing to worry. Okay,
Mm.
this is a one of a kind of event that
Mm.
comes up. But for a longer-term investors, definitely any steep correction in the stock like DMart can be a good opportunity for the investors who are looking for enter into the stock. Probably they
Yeah.
can accumulate into their portfolio. And DMart can be bought as a SIP mode also on a monthly basis for the investors' portfolios are concerned. But the stock is no longer cheap. It comes up with a steep valuations with market capitalization about 2,30,000 crores. It's no longer a cheap stock. The valuations are quite steep and expensive. For the investors, these kind of sharp cuts in the price can definitely give entry points for the investors. Nothing to worry for the long term investors. Medium to short term investors can be a jolt kind of thing for the investors. But this is a stock for long term, not can be conceived as a medium to short term stock.
Okay, the stock actually, after crashing about 6% in the first half, it's actually slipped to a 6-month low level as well. In fact, when we talk about the last 1 year's performance, there has been a double-digit loss also for the stock. So, despite that, are the valuations looking expensive, and where would investors really find comfort to really add on in huge volumes to their own portfolio if, in the long term, the stock still looks promising?
Sakshi, as you mentioned in your initial commentary, the stock has been a multi-bagger from its from the time it is listed. So the stock can be spent some kind of consolidation phase or a period of time because uh, you know the valuations and the future returns always priced into the stock price always. So probably for investors, 3,000 can be the very good range. They can start buying in a lump sum way. But for the medium to short term, they can buy the stock in a staggered manner. But right now, we need to see DMart how their plans with respect to the online sales are concerned, because online is the flavor of the market, how they are going to uh, uh, take the competition that's coming from the online and the other new age products like the Jeptos of this world have been creating some kind of pressure on these kind of stories like D-Mart. So
Hmm.
we need to wait and watch, but there is nothing to worry with respect to their business model is concerned. But the valuations look little bit stretched in the medium to short term.
Sure. Sure. Okay, understood that. The other big earnings that we're going to be talking about is again, a stock that has been a wealth creator and has been perhaps regarded as one of the most promising stocks in the Indian stock market by the entire analyst community, the investors as well, over the last 25 years or so, when it has been perhaps regarded as one of the best stocks that we have listed on the stock exchanges. But this stock has actually again underperformed hugely from the investor standpoint in the last 1 year or so. HDFC Bank is what we are talking about. Now, when we talk about the Q3 earnings, they have actually surprised the street on the upside. Although the stock is perhaps listless after the earnings, but most brokerage houses maintain their estimates after seeing strongest NII growth in say 14 quarters that HDFC Bank has reported. So you can see a 0.5% decline, 1591 as the price. So the stock market hasn't been extremely exuberated with the kind of numbers that we have seen, but the analysts and the investors community is like quite happy with the kind of numbers, because the net interest margins at 4.3%, also highest in 10 quarters. Then we've also seen the net interest income or the core income that's grown in at its best pace in the last 14 quarters. It reported a net interest income of 22,987 crore rupees for the December quarter. That's up 25% compared on a year-on-year basis as well. The net profit also has come in at 12,259 crore rupees. The bottom line has grown 19% compared to the same period last year. So very, very strong performance on most of the parameters that we have seen. And in fact, the only concern that most of the analysts have brought about is the merger with HDFC that could continue to be a near-term overhang or a headwind, as the deposit mobilization is an evolving challenge that the bank will have to go through. But your thoughts on the earnings, and what did you really like about the company's earnings, and can that really help HDFC Bank stock recover now and to also move towards a re-rating? We've seen a whole host of brokerage houses reports that are now giving targets are upwards of 2200 and thereabouts as well. Your own sense of the earnings, what did you make of it, and the way stocks will react?
Actually, one thing is fabulous earning track record from coming from HDFC Bank is concerned. Of course, as you mentioned, there is a overhang of HDFC Bank and HDFC Limited. Major overhang is there on the stock. Uh, but one thing we need to see is there are in all the parameters the bank has done extremely good in the current quarter, and it's a bit surprise to the market also. But you can think why the stock has not done anything great today market or in past 1 week. One thing is we have not seen any kind of movement of FIF flows that are coming to Indian market in past 10-15 days time. That's the one reason the stock is in a consolidation phase right now. But it offers a wonderful opportunity for the long term investors. Uh, the stock long way to go with a highest track record, with a very good corporate governance in India. So investors with a medium to short term are investors with a long term. Definitely, HDFC Bank offers a very good entry point at this point of time.
Mm-hmm.
Uh, and long term investors, they can enter the stock with a target price around 25% potential upside from this level. Uh, Without any shadow of doubt, HDFC Bank is a bank to accumulate in each one's portfolio, Sakshi.
Okay, so a strong, company, strong governance, fundamentally strong, and a company that has been a wealth creator. The results only prove that there are still a lot of moats that investors can actually look at in HDFC Bank if they're looking at now from a potential long-term perspective. Mr. Bathini points out at a 25% upside that investors can definitely look at it, and this could be for the long-term investors a good entry point for the investors as well. So two big earnings out, a whole host of other earnings will also keep flowing, and we will keep discussing all about it as well. But some of the stocks that are actually buzzing quite sharply in trade, I wanted to just take your view on those as well. First one is Sula Vineyards. This stock has actually shot up quite sharply after we actually saw that Mukul Agarwal picked up a stake, and strong quarter three business update as well that we have seen from the company. Of course, amidst the listing, and there were a whole host of expectations from the company being the first one of its category to get listed today. Look at the kind of strong move that we've seen on Sula Vineyards, 15% up, 375. That's the kind of move that its biggest intraday rise since the listing that we have seen as well. Your thoughts on the development on the stake sale and stake which has been bought by Mukul Agarwal. He's picked up a 1.9% stake in the company, and what does it really do for the company going forward? Does it augur well for all the investors who've got the allotment, staying on with it, to continue to hold the stock in their portfolio, or look at this kind of a sharp move to actually make an exit?
Actually, in your previous show also, we discussed about solar mines. What are the best stocks one can look at in the recent listings, and we
Yes.
do discussed on solar mines for the investors to pick the stock in the recent listings. Of course, the stock have a very long term story right now, because of course the kind of stake buying from some kind of HNI investors always makes the stocks to be on the news, and get the stock to get highlighted in the market, and it attracts the medium term interest from the investors. For a long term perspective, the stock have potential upside. They have a different model, and as the discretionary spends of Indian consumers goes up, these are the themes that are going to take advantage for the advantage in India's consumption story. So the existing investors can hold on to the stock, uh, and uh, and probably next couple of quarters are the extremely crucial for the stock. But